Russia's wartime economy is starting to buckle under its own weight. Budget deficits are ballooning. Meanwhile, crude production from Russia is feeling the pressure, and that's making the energy markets begin to wobble. Now, this wobble is sending waves through currencies, commodities, and safe havens around the globe. But for us Canadians, this isn't just about geopolitics right now. What's going on with Russian crude? This is a direct transmission mechanism into the Canadian economy, the bid for neutral reserve assets like gold and Bitcoin, and a direct manifestation of what trust in policy breaking down looks like. So if you guys stick around with me for the next few minutes, I'll show you how the stress on Russia's oil is reshaping the Brent curve, how this affects the Canadian dollar, and what this means for Bitcoin and gold moving forward. So let's get into it. So here we are, guys. Right off the bat, I whipped up this proxy chart just to give you guys a visual of what's going on with oil and how Russia dumping all of this cheap barrels onto the market is affecting price. So due to the nature of Russian disposition in the current geopolitical landscape, they have been pretty much forced into taking these actions. And by actions, I mean selling barrels at a discount to people like India and China, while the rest of the world is sanctioning Russian barrels. So what this is doing to the front end of oil spreads is widening them. So you can think of it, if the US is selling barrels for 70, then Russia comes along and undercuts them, sells barrels at a discount for 68. That gives oil prices a $2 spread. Now, as Russia dumps more, they're dumping them at a greater discount, causing that spread to widen even more. And refineries around the world see this as an opportunity, as an arbitrage opportunity, buy cheap Russian barrels, refine them, and then resell them at a profit, which is in turn putting downward pressure on barrels coming from places like the US, Canada, and potentially like Saudi Arabia. So a fact that most investors miss is that oil prices don't just drive inflation right now. They in fact price trust in the geopolitical system. And so when Russia does what it does and floods the market with all these cheap barrels and fiscal cracks around the world begin to widen, people begin to read that as policy fragility. And when it comes to Canada, that means our energy sector flips from a tailwind to a trap. And then investors begin to flip capital into assets that no government can touch. Things like gold and things like Bitcoin. And this, guys, this is how an energy shock turns into a credibility crisis. So what does this mean for a country like Canada that relies so heavily on oil? Well, my friends, the answer can be quite obvious sometimes. This is oil overlaid with USD CAD. And when we look at this, anytime oil catches a bid, the USD CAD pair tends to trend downward, which means the Canadian dollar has found some relative strength. Meanwhile, when oil trends down, say when Russia floods the market with super cheap barrels, USD CAD tends to go up. And so what that means in Canadian dollar terms is that our loonie is experiencing some relative weakness. Why is that? Well, we can't keep up our oil exports at the same price and compete with Russia. So our exports take a hit. Because why buy $70 barrels when you can just go get 55 barrels from Russia, right? So in turn, our currency begins to suffer. Now, what does that mean for a country like Russia? Same thing. These countries that rely so heavily on oil exports, their budgets will take a hit when crude prices drop and margins get squeezed. Right, we can see that begin to manifest in the USD ruble pair. It's beginning to flatten, potentially in for a dip later on this year. Now, I don't know what tricks Russia has up its sleeve, but Canada definitely has no tricks up our sleeve. We are taking the brunt of this, and any country that really relies on commodity exports are exposed to a great weakness when geopolitical tensions are high. Now you're probably thinking, how does gold and Bitcoin fit into this picture? Well, at least from my lens, I like to look at it like this. So we see oil as a commodity, something that is relatively finite. We lived through this time called the petrodollar, where the USD was pseudo pegged to oil because production was relatively finite. That eventually went away, yes, but the idea behind it is what's important. And that idea is that our currency needs to be tied to something that is bounded by the laws of Mother Nature. So oil, silver, gold, things of that nature. And so when there's an overproduction, when Russia floods the market with these cheap barrels, when oil's price no longer reflects safety or the ability to preserve a degree of value or purchasing power over, say, the next 1, 2, 5, 10 years, a lot of that capital will be pulled from oil and flock into other relatively finite or truly finite commodities. Which is why, my friends, we are seeing gold prices soar. I remember I texted my dad one day showing him a screenshot. Gold, what was it, like 3,500? And I'm like, yeah, we'll probably see 4K gold by the end of the year. He thought I was out of my mind. Absolutely bonkers. But here's the thing. Gold has one of the best track records of preserving value and purchasing power over time, over 1, 2, 5, 10 plus years. And we can see that in its current price. It is almost at 4K. Why? Because a lot of this capital is flowing out of oil because it no longer is viewed to have that same capacity or ability to preserve purchasing power. And now a lot of that capital is flocking to gold. Next slide. A lot of that liquidity is also finding its way into stable coins and in turn flowing into Bitcoin. Here we have the total supply of stablecoin issuance, and it's at an all-time high currently, right around 300 billion. And a lot of that is going to flow into Bitcoin. Why? Because Bitcoin is the only true finite commodity we have, and will be known for preserving and increasing purchasing power over 1, 2, 5, 10 plus years. Just like gold, but better. So we can see, guys, whether it's Russia dumping super cheap barrels onto the markets, whether it's global banks injecting liquidity or easing policy, or whether it's whatever Trump decided to tweet that morning while he's sitting on the toilet, the underlying narrative remains the same. And that narrative is capital will always flock to where it's treated best. And in regimes like this, where geopolitical tensions are high, fiat currencies are losing value at record paces, and oil no longer does the job of holding value, all of that capital will begin to flock to things like gold and to Bitcoin. So do yourself a favor, position accordingly, and check back in with me in the next year. If you guys enjoyed this video, drop a comment down below, hit that like button, and I'll catch you guys in the next one.